Welcome to readtheticker.com. Today we're going to talk about Financial Position Sheet Part 2 and how it's used with the Wyckoff Wave. Now, this document you see in front of you, the Richard D. Wyckoff of Trading and Investing in Stocks PDF, which is part of the Wyckoff Associates workbook. It's the original typed up presented document that was sold to students via Bob Evans. As you can see, I'll scroll through a few pages. It's written in hard type. I'll just magnify it a bit. It can be a bit of a pain in the backside to read it. So what we've done here at readtheticker.com, I like to read things. I like to be comfortable reading things. I've converted this document, all the major parts of it, which is about 80% of it, into a easy reading form of Arial text, coloured with highlighted large font, so the members can easily go through it via RTTWC, which is part of the RTT Plus service. So the reason why this is done is because you really need to read some of the chapters 2 or 3 times through the year or through a month to get the hang of it. Now, what we're going to talk about here, I'm going to highlight the Wyckoff Wave, and chapter 7M talks about how Richard Wyckoff analysed a Dow Jones index, which is basically the Wyckoff Wave, and how he determined the trend. Okay. Now, and section 18, as I discussed in the previous video, is talking about the position sheet and how to select stocks and managing waves, individual stocks within the sector. Now, something very interesting about this, now, being a stock trader or investor or even whatever you do, you are a bit of a detective. Nothing is what it seems. Now, as I discussed last week, this is Richard Wyckoff's position sheet. As I'll quickly explain again, you have the sector, then you have the individual stocks, then you have 1 and 2. I think 1 is a fast wave, 2 is a slow wave, or it might be the other way around, you have to read the document. 3, slow, fast, so you have an idea what's going on in the sector. 4 is down, 1 and 2 is up within the sector. So he measures the waves. It's pretty much the PNF wave chart, point and figure bar chart, and he sort of says, oh, what's going on here? You look at a sector here, here's rail equipment, for example. It's got a lot of negative waves. The whole sector's been hit at the moment. You look for a sector which has mostly up waves. Electric equipment has some up waves. I don't know why it's got 2, 1 up, 1 down. Interesting. What's another? Obviously, copper's got only up waves. You'll find that attractive to go long. You'll say, well, this sector's outperforming other sectors which have little down waves. So, like, copper is outperforming sectors, outperforming rail equipment. Now, what's important when you look at it, when you start looking at waves, this is, for example, a wave might be a rally that takes 10 to 20 or 30 days, which is represented by a point and figure chart. And it shows that there's been a buying burst, there's been a demand burst. So a wave is saying this is the last time demand put its stamp on the chart, or supply put its stamp on the chart. And there's always 2 types of demand. There's demand like short covering, which is short and sharp, and it may not last because the trend will take over and people will push back down the short covering. Or it may be a long sustained rally, which is people slowly accumulating, the long slow rallies. Or it might be a sell-off where it might be a sharp sell-off, but it might be climatic, which might be the end of the move. So he's got to take into account what type of waves there are, and that's why he numbers them 1, 2, 3, 4. In our service, we number them 1, 2, 3. We explain exactly how we number them, very similar to the Wyckoff representation. Now, the reason what you want to think about is comparing the Wyckoff Wave position sheet, the Wyckoff Wave position sheet with the analysis of the overall trend of the market with Wyckoff Wave. Let me explain myself a bit more. Let's just move to our swing scanner. We will select the swing scanner PNF wave. But before we do that, I just want to explain some definitions. We've got the FAQ help. Scroll down to Wyckoff PNF wave 1, 2, 3 notations. As you saw with Richard Wyckoff position sheet, he had 1, 2, 3, 4. 1, 2 is up and 3, 4 was down waves. Here I've got a example chart explaining the 1, 2, 3s that we use. Here we have, this is a point and figure chart. Minimum 550 records go into it, and it makes a certain amount of waves. It's automated. An average bar change is 10.33%, as up here. Average bar change 10.33%. 3 is 2 times the average bar change under 20 periods. 2 is 2 is average bar change greater than 1.5, less than 20 periods. 1 is average bar change greater than 1.5 over 20 periods. So 2 and 3 are faster than 1. 1 is slow, 3 is much faster. It can be climatic. 2 is the in-between between 2 and 3 and 1. So here we number the waves up here like this. Obviously this is an optional thing. And what the point and figure wave scanner shows is the last 21 bars. So we put the last numbers up there for the last 21 bars. And this number count up here, you see dash 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 5 dash 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 5. So what this is for is when you get a tight consolidation and you want to count how many bars there are, you can just eyeball the 5s and see how many bars there are. It's just a quick it's a count tool to work out the forecast of PNF. But, okay, let's go to the swing scanner. Remember what I've showed you here with the 3, 2s and 1s. Some more juicy information there, and there's the financial. Sorry, this is the financial position sheet part 1 video here. We'll put part 2 in there later. There we go. Here we go. Select PNF wave. Right, we're back at the swing scanner PNF wave. Now, as I just talked about at the beginning of the video, we're going to talk about the relationship between Richard Wyckoff Wave analysis, or the market trend overall from a leading index like the Dow Jones, S&P 500, versus understanding what goes on in the Wyckoff position sheet and how it interrelates. What we're going to do is we're going to select a sample to study. We're going to select, I think we'll select the NASDAQ. Need a large sample to find and explain little tricks and nuances. Now within the swing scanner, those who know it, we have our PNF wave. I'll quickly explain once again. The first column is 3, that's the last wave that appeared, it's 3 over here. The black number is the number of days within the last wave. 4 is the summation of the range of bars of the last 21 waves. Here 3 plus 1 is 4. And this white column here shows the last 21 waves that occurred on the point and figure chart. And over to the right we have multiple trend tools: RTT trend value, which is RTT trend status, RTT rank, and RTT trend power OBV. And over here we have a coloured version of the last 2 years of trend, which is dark green is for a 2-year high, a solid green is a 1-year high, and a light green is no new high, but it's going up. And obviously red is a 1-year high, so dark red, and it's all very well explained within the FAQs and helps. So what we're going to do is we're going to select the trend. The trend is per stock, so we're going to select RTT rank. This is for the NASDAQ 100. And what we're going to see is we're going to compare a trend study, which is pretty much based on some sort of average or stepping or whatever other mathematical indicator out there, which always has a lag. Remember, all trend tools have a lag. We're going to look at the trend. Obviously blue is very strong, and green, and we've got red down below here, which is not going so good, and the black in the middle, which is sideways or not yet trending. So what we want to see, we know our PNF wave, 3, 2s and 1s. The 3, 2 and 1s are pretty much an example of the last demand or supply footprint. Every demand and supply footprint has a different meaning. Is it off a base, going through as a continuation? Is it breaking down through resistance, breaking down through support? How fast it is? How much volume is in it? Is it short covering? Is it new demand coming in? Is it you have to analyse it, the point and figure chart, to get an idea what's going on. But what you can do at this level is to say, okay, we have trending stock, we have demand footprints showing no interruption with supply. So these stocks here from PAYX higher, we have demand footprints of waves with no interruptions of supply in the last 21 Wyckoff wave, in the last 21 waves, I should say. As we creep down to the lesser trending stocks, we get the odd red number turning up, which shows some supply footprint. And when we scroll down to the bottom, we're going to see obviously more supply footprints than demand footprints. So here red, lots of red, so red, red, red. So what we're looking for, now the overall market is trending up. So the overall trend is up, the Wyckoff Wave, he would say, and look at the Nasdaq, well look, it's trending up, that's great. What we're looking for is stocks that are doing a bit of a hockey stick at the bottom. It's stocks that have had a bit of a slump and they're starting to recover, come back with the trend. So they might have suffered for 6 months or whatever have you, had a sharp move down. So what we want to do, we want to scroll down to the bottom. You see how some of our trend indicators are on. We're looking for footprints where the demand footprint is showing up on poor trends. So here we have QCOM. It's got the last red bars of 3 at 14 days, and overall we've got a 5 summation here. So the demand footprint is showing up in 3 out of the 4 waves shown here. If I go to the right, I'm looking at a 2-year trend. I might say, oh, where's QCOM? Scroll to the right here. Yeah, we had a 2-year high shown about 2 years ago. This whole bar is 2 years. Then it hit about a 6-month low, and it's starting to go sideways. I would bet because we've got a bit of a 1-year low here. This little red, stronger red bar here. So a stock that made a 2-year high, that made a 1-year low. That means it's had a bit of a sell down. Now we're seeing some waves come in, demand footprints coming in. So it gives me the impression that it's basing, maybe forming a base pattern. Double bottom, triple bottom, some sort of head and shoulders, something like that, sort of classical pattern. So I'm saying, this is alerting me to change in a down stock in an uptrend. So I'm seeing demand footprints coming in. That is change, and change is a word that's correlated to making money. All right. So here we are once again. We've got some demand footprints coming in here for VIAB. Now, obviously, I want to look for over here. We've got, yes, it made a 2-year high and some 1-year lows there. Like a swing scanner, it's just a highlight which charts to look at, where to go hunting. You're a detective. So this is interesting down here. We've had lots of 2s, lots of negatives, and all of a sudden the 3 turns up. That's starting to roll around. I think it's a mat. What's that? Metal. Okay. So the idea is to say, okay, and we might even go into our middle stocks where we don't have such a poor range. We sort of say, oh, okay, what's going on here? So here's the demand. It's something it's SanDisk, yes, but the supply footprint turning up here. So this actually might go lower. Here's one. What's this one? 20th Century Fox. Or maybe the good movies coming out that's going to boost this one. So the demand footprint turning up here. The stock is, it's made 2 years, a 2-year high twice in the 2-year range. No 1-year low, so it's obviously going sideways somewhere. So you want to check that out. So the demand footprint's turning up again there. So what I'm just trying to say is you might end up with a 3 or 2 or 1. So you want to check that out. It's probably forming a base. So here, once again, I'm talking about looking for change. You obviously got higher stocks making higher highs here, which are continuous. That's good hunting. And down below here, where you're seeing the demand footprint come in, and it may be forcing a change, like a stock that's done a hockey stick, it's going to go back up. You're seeing the demand footprint come in from these waves, by the overall trending tool saying it's not so good. That is change. Now the other point to watch out for, in the Wyckoff Wave studies, we all know what a double top is, a triple top is, and a head and shoulders and all that, carry on. In a true market top, you'll start seeing a sign of weakness. That means you'll start getting heavy volume supply waves down. Now that'll show up in your market leaders and your leading sectors. So if you go to you can either go to a sector like the Nasdaq, and you'll see that these stocks will be in red and green here on high trend or high numbers here, the trending values. But you'll start seeing 2s and 1s and 3s turn up, which are red. That means the supply is turning up at the height. When you start seeing a lot of those in the leaders and sticking, because you obviously get the odd one that doesn't stick, and it's but you'll see the supply coming in shown in this point and figure chart. So that's what Wyckoff would do. He would look at the position sheet and say, oh, well, the overall Wyckoff Wave is up, but my position sheet showing my market leaders are showing a lot of heavy supply waves. That would be a concern. Then he would go to the chart and say, are these supply waves forming a reason to go down. And he would study the supply wave, look at last point of support, and see what would happen if it breaks support and what have you. Exactly on a market bottom, if you had a strong market turning down and a lot of demand waves started turning up. Because obviously for a stock to go up or down in a classical head and shoulders reversal or double bottom reversal, there's going to be a demand footprint showing up. So what you want to find demand and supply footprints turning up where they should not be in a trend. Let me say that again. If you've got supply footprints turning up in an uptrend in market leaders or sector leaders, that is signs of a top. It is the beginning of a top. It's not the end of it. You have to wait for more confirmation. So on a bottom, if you've got demand footprints turning up in market leaders and sectors, that could be a beginning of a reversal. This type of scanner will show that. And this is how Richard Wyckoff, he studied the wave, the Wyckoff Wave of the overall index, which is the S&P 500, Dow Jones, what have you. And then he would look at his position sheet and say, oh, okay, market leader, whatever it is, we've got lots of supply coming in. And that's a concern. He would also consider rotation. Sometimes you might have a sector like biotechnology leading the market up for a year, and then supply will come in. But he'll look over to another sector and say, oh, there's technology or there's industry, and they've got a strong demand wave in. So that's rotation from biotechnology to biotechs to technology, or biotechs to industry, or biotechs to something else, finance or something. So he'll look for sector rotation. So when you get overall sectors showing supply footprint coming in, you get a good idea that a top is in. So you have to take into account the rotation when you get supply come in, because the money managers might have realised that a certain sector's gone too high. They'll start taking profits. And we all know that happened in IBB and biotechs about 6 months ago. There was heavy selling as the market was going up, and there was taking money out of that sector, moving into another sector. So supply footprints in an upmark show possible topping or possible rotation. These things will this swing scanner will show that. Now we can always go to our industry, PNF wave. This is the higher level than the Nasdaq's swing scanner. What are we doing? Still running the scan. Okay, done. Okay, we're still sorted on trend, and we have our leading sectors. We've got pharmaceuticals, once again biotech's way up there. We've got healthcare, of course. We've got retail, is it? Yeah, retail. Okay, those sectors are leading. We've got what's this? What's this one here? Staples. So we've had a couple of supply footprints come in there. Okay, when market was going a bit sideways, the supply footprints come in there. So the sector's not performing so good. It will be the obvious ones. We've got silver, junior miners. Oh, of course, we've got what's this? Oil, silver. Yeah, oil service. Sorry. Coal, oil and gas exploration. So here's an interesting one. We've got the sector XOP, right? So we've got 3 and 5 here. So we've got the last footprint was a 3, and we had overall this last 21 bars up to 5. So I would be looking as this RTT trend value is 32, right? I scroll over here and I see, oh, the volume is 14.4 on the RTT trend value. It's not negative. That's quite strong. And then I look over here and I say, oh, we've had about a 2-year high. The stock, the sector made a 2-year high about 18 months ago. Then it made a 1-year low. It's probably been basic for the last 6 months. So I want to look at why demand is coming down, and why is demand coming in a downtrodden sector. So once you know the sector's having a bit of a strength, then you go to the individual stocks. Typical Wyckoff structure. That it's obviously probably already gone, but you can check it out. Once again, the middle of the road trends we've got here. This is a sector study. Once again, you look over here. What's that? Industrials. So demand footprints coming in there, but the trend hasn't been so great. Maybe that's suffered rotation. Plenty of 2-year highs here. So keep an eye on industrials. When leading sectors up here have profit taking, and they go to other sectors which haven't done so good. A bit of rotation. Rotation is not topping, it's just the moving of money from one sector to another. like they use the media, the money managers use the media to keep a sector hot, to keep it going up so they can sell into. XLP, like I said before, that's got a bit of supply footprint. Was obviously hot. Bit of rotation going there, you would say, because the market's still going up and the sectors aren't all dragging out. So plenty of 2 years high here, so a bit of selling going on there. Once again, understanding the waves, understanding the Wyckoff overall wave of the market, mixing it in with the sector supply and demand footprints from the P&F wave, looking at the sector, looking at individual stocks. It's pretty much bread and butter Richard Wyckoff analysis. This is how he would do his detective work. Thanks for watching.